Good evening, everyone, and welcome to the Sunday Evening Forex Breakdown. My name is Gail Mercer, and I will be your hostess tonight. I would like you to take a moment to read over the Nadex risk disclaimer. It is for your protection as well as ours. Basically, you should never trade with money that you cannot afford to lose. Good evening. Okay, let's go ahead and get started. For those of you that don't know me, my name is Gail Mercer. I've been a Forex trader a little over 15 years now. I'm also the author of Trading Nadex Binary Options, Keeping It Simple Strategies, The New Trader's Guide to Trading Nadex Binary Options in Spreads, Trading Nadex Binary Options Using Currencies, as well as Trading Nadex Binary Options in Spread using candlestick patterns. I've also been a prior speaker at the Wyckoff Volume Conference, Traders World, Traders Expo, and the TradeStation User Group. I do specialize in candlestick price formations, support, resistance, and volume analysis. I would like you to visit tradershelpdesk.com to learn more about me and the indicators I use. Of course, you can always contact me at gm@tradershelpdesk.com. Now, before we go and start looking at charts, I do want to give you, again, my website address, which is www.tradershelpdesk.com. My email is gm@tradershelpdesk.com, and you can always call me at 336-263-0122. If I'm on the phone or I'm in a trade, just leave me a voicemail, and I'll be happy to get back with you, okay? Now, I want to go and begin with what Nadex offers. Tonight is going to be an excellent example of why you should explore all of the products that Nadex has, not just stick with a touch bracket or just a 2-hour or just a daily. And we'll get into that more when we're looking at charts. But you can actually go into the Nadex platform and you can see that under the binaries, they offer different binaries, okay? You have what's called a 2-hour binary, and then you'll have daily binaries as well. Now, on most of the instruments, they are 24 hours. There are some instruments that are not. For example, if I expand the Aussie yen, you can see currently there are only dailies and weeklies available. The Aussie yen 2-hour binaries open at 8 a.m., okay, and that's New York time. And that is also the case for the British pound yen. I believe it's also the case for the Euro British pound as well, and the USD CAD as well as the USD Swiss franc. So, for example, if you see a trade that may be setting up and your profit potential is, let's say, 15 pips on the USD Swiss franc, well, you might not want to trade that until the next morning. So, you know, you may want to limit that trading 2-hour binary from, let's say, 8 a.m. until 3 o'clock during the U.S. session. Do y'all understand that? All right. Now, they also have the call spreads, which are very similar to the touch brackets. The major difference between the call spreads and the touch brackets is touch brackets use if touched. So if a floor or if the ceiling is touched, then the trade is exited either with a loss or a profit. Whereas the call spreads uses at expiration value, okay? Whatever the expiration value of the instrument is or the market is, that is what is used there, okay? So it's not if touched, okay? It could actually come down here, touch it, and then go back up, and the call spreads would be the better option, okay? Now, tonight, as I said, tonight's going to be an excellent example of why you would want to look at the different products to trade, and I'll go more into that as we're looking at the charts, okay? Now, the first thing that I do is I look at Forex Factory. One reason is because I want to know what is happening this week that is going to affect my trades, okay? We do have a couple of things that are going to affect our trades this week, all right? Number one, today is Sunday, and all day today is a bank holiday over in Japan. So if you normally trade the Asian session, it's going to make a difference. You don't necessarily want to be trading during a bank holiday because that means traders are not going to be there to trade. And a lot of times you'll get some sideways movement. Okay. Tomorrow night at 9:30, we do have the monetary policy meeting minutes. That may move the market, but it will not move it substantially. Okay. I wouldn't anticipate a 100-pip move off of that because number one is the Aussie, and this is just the minutes. Okay. Now, Tuesday morning at 4:30, we do have a market report on the GBP. That would be your average earnings index 3 months over the year, okay? Then at 8:30, and this is really the only one that we have this week on the U.S. side, is on Tuesday, we have the core sales, core retail sales, I'm sorry, month over month, retail sales month over month. Then we have Fed Chair Powell speaking, as well as the FOMC member Evans speaking. Now, one thing to pay attention to is when you see that, it's a big difference, okay, when audience questions are expected. How do you know when there's audience questions expected? If you come over here and you click on the folder, it expands and it tells you whether questions are expected. In this case, he is scheduled to deliver a speech for the French G7 presidency 2019 in Paris, okay? There are no questions anticipated. So if he says something unexpected, for example, if he was to say, you know, we were thinking about cutting the raise, but now we're not going to, that would definitely move the market, okay? But absent that, this may not move the market at all, okay? But then when you go down here to the member Evans speaking and click on it, you can see he is due to speak at a television appearance on CNBC, audience questions expected. So it's not the 1 o'clock speech that will move the market. It may be the 3:30 p.m. that will move the market, depending on what he says and what questions are asked. Now, on Wednesday, we do have a CPI year over year for the British pound. We also have CPI month over month at 8:30 for the Canadian. At 9:30 p.m. on the Aussie, we have the employment change and unemployment rate. Thursday morning at 4:30 a.m., we do have retail sales for the British pound month over month. And then finally, Friday at 8:30, we have core retail sales month over month for the Canadian. Okay? Now, all of these are based on New York time. Okay? That's the time zone that I'm in, so that's the time zone that I use. Now, I want to go, and we're going to start by going over the Aussie yen. Now, the first thing that I would notice on this particular chart, here, this is not overextended, this is not overextended, this is not overextended. So that tells me I do not have any overbought or oversold markets on the weekly time frame. If you notice, the ATR, which is this plus sign, is moving down. So in my opinion, this is a downtrend, okay? Then when we come over to the daily chart, again, there's nothing that indicates this market is either overbought or oversold, but it is at a resistance area. So that tells me that this has the potential to come down and test for support right here at this ATR, okay? Now, this blue line here also shows me that because I have marked this resistance level over here on the 6-hour chart. So that way, if I'm only looking at the 6-hour chart, I can see this has now tested not once, not twice, but 3 times, and each time they have rejected it. Does that mean that it will automatically go down? No. They could come up and they could test it again, okay? The distance between where I marked this, which was the close of the bar on Friday, and this line up here is 16 pips, okay? Now, remember what I told you about the Aussie yen. It has no 2-hour binaries available today, okay? So then we have to go to a daily, okay? If we went to a daily, what's the strike width? In other words, what's the difference between one strike and the next strike? It's 20 pips. So if you were doing an at the money and you presume that this would go and break through here, okay, this is 16 pips of potential move, okay? That tells me it may not even move one full strike in my favor, okay? That generally tells me I do not want to trade that market using a daily. Does everybody understand that? Any questions about that? Now, what other trade could I do? Well, let's say that it comes back to this blue line, okay, and then it forms a pivot high, okay, then I may consider trading that back down to this ATR, depending on what time it came in and if I could zero down in time, okay. So I would go down to a 60 and then to a 15 and say, okay, here's my trade setup. Any questions on the Aussie yen? Okay, if we don't have any questions on that one, we'll move over. Now, most of my charts I have already marked just to save time tonight. So we're going to go look at the Aussie dollar, okay? And again, if you're looking at the Aussie dollar, this is not overextended yet. This blue line, anything above this blue line would indicate overextension, okay? It would be overbought. If it was below the red line, it would be considered oversold. As you can see, it's neither one right now, okay? So if I'm looking just at the ATR, this is in a consolidation period because the ATRs are going sideways, okay? That simply means that the current ATR is equal to the previous ATR. Then when I go over here to the daily, you see exactly the same thing here, okay? So this market is consolidating, okay? Now when I come down to the 6-hour chart, we can see we're overextended here. That tells me that more likely than not, the market needs to retrace. It needs to come down. It needs to find support, okay? So from where I actually analyze this back down to this ATR is currently 48 pips. Okay, so that tells me that I think it will come up here and it will retest this. Okay, that's what I would be anticipating. Once it did, if it forms a pivot high formation, then I may be interested in trading this, okay? This is where you could actually come over and say, okay, what is the strike width on the Aussie dollar? If I wanted to do a 2-hour binary on that, then what is the strike width? And you can look at 8 p.m. or 9 p.m., it doesn't matter. But do you see how the difference between one strike to the next strike is 4 pips? So that tells me this has the potential of moving 10 strikes. Does everybody understand that? So that tells me that, hey, I could actually do some out of the money binaries on this. Would I do it, right now, no, I would take a wait and see approach. I would want to see on a 60-minute and a 15-minute that the market is actually going down. And I can already tell you right now it's not, because this is a bullish part. Okay, so there's no reason for me to go down in time because we still have a bullish part right now. Everybody understand that? Any questions on the Aussie dollar? So now we're going to go over and we're going to look at the euro yen. And notice that I'm doing the same thing on every one of my currencies. That's what I do. I analyze using the same criteria, okay? So this one is going down. Nothing is oversold. It's not oversold, not oversold. When I look at the daily, you can see that this is in a consolidation phase, okay? It had been moving down, but now it is consolidating, okay? Again, there's nothing that is overbought or oversold on any of these oscillators, okay? When I go down to the 6-hour chart, there is nothing that is overextended, okay? But we are at a level that may support prices right here. And directly below that, I have another one that may support price. So in my opinion, I think this is more than likely going to go up to this ATR, okay? Now, what would I like to see? I would actually like to see this come down to this line right here at 121.37 and then go back up and take out this ATR. Okay, is everybody with me so far? Now, can I trade this back to this ATR? No, it's 22 pips. The strike width on the euro yen, I believe, is 10 pips. So that tells me it's only going to move a maximum of 22 pips. Okay, so I wouldn't want to trade it down to here. I think the better trade may be if it forms a pivot low here, then the better trade would probably be up to the ATR, which is 49 pips. So this is a 5-strike move. This is barely a 2-strike move. Why is it important to have more strikes when you're trading these? Because I use out of the money. Okay, so if I have a 10 pip strike and I'm expecting a 50 pip move, even if it only moves 30 pips, guess what? I have the potential to make money. Okay, does everyone understand that? So even if it doesn't move as much as I think it will, I still have the potential to make money because I allocated for that. Okay? And I think most traders do that. They allocate for, hey, if it doesn't move as much as I want, will I still make money? I do look at that. So let's go over to the euro dollar. Okay? Now, on the euro dollar, you can see here, we're not overextended at all. This is just starting to move up, so this tells me it has the potential to go up. Okay, over here we are currently moving down. Okay, so this one's going up and this one's coming down. So you got 2 time frames that are fighting each other. Then when we come down to this one also is going up. So that tells me this may be going into this time frame, which will also turn this time frame. Does everybody understand that? Your first area that may actually act as resistance will be this area here at 1318. So in this case, I'm going to measure, okay, if it moves from here up to here, what is my profit potential? Profit potential would be 48 pips. What's the strike width on the euro dollar? It's 4 pips. Now this is one, you know, you've got a potential for a 50 pip move, okay? And if it breaks through this, it may actually even move up to 1.1500. Okay, so that tells me, hey, this might be a bigger move. Okay, is everybody with me so far? So how would I look at trading that? Well, what I would do on that one is come down to the touch brackets. And I would look at the touch brackets and say, hey, where is one that I would likely trade? Okay. If you're looking for the market to go up, in other words, your bias is to the long side, you would always be looking at the number on the left because that's the one that limits your risk. Okay. And the number on the right would be your profit potential. Okay. Or that's the maximum profit potential. Now, if you're looking to go short, let's say you think, no, it's not going to go up, it's going to go down. Well, in that case, you want to look at the number on the right because that is what's going to limit your risk, okay? Because you're expecting it to go down. Does everybody understand that? And your maximum profit potential is limited by the number on the left, okay? So in this case, and there's a couple of ways you can do this. You could trade, a 2-hour binary or a daily binary up to 1318. But remember, this only has the potential to move 2 strikes if you're doing a daily, okay? Or you could just do a 2-hour binary, wait for it to break through this area. It will come back and test for support again, and then it will continue up. And you could always do the touch bracket then. Any questions on the euro dollar? Let's go and look at the British pound yen. Now, on the British pound yen, the first thing that I notice is over here we are overextended on both the stochastics and the ADX. Okay, so this is at extreme levels. Then when I look at the daily, you can see none of these are overextended whatsoever. Okay. Then if we go and we look at the 6-hour, you can see that, okay, this one is moving down. This one is moving down, but these are the issues right here. You're oversold. But this is also a weekly chart. I mean, it could be next week before that moves up, okay? So the daily is still saying that you're going to go down. When you look over on the 6-hour, this is consolidating. Now, if you're consolidating and there's no indications that the market is going into a retracement to test for support and resistance, then the next area I would look at would be a trend trade, which would be to the downside, and my profit potential is the prior low, which is 59 pips away. Does everybody understand that? Any questions on that at all? All right, let's go and look at the British pound dollar. And let's see what's going on there. Okay, on the British pound dollar, again, on this one, there are no indications that this market is either overbought or oversold. And this market is currently moving down. Then when you look at the daily chart, you can see that this is consolidating. But again, there are no overextensions on any of the oscillators. Then when I go down to the 6-hour, you can tell that they just broke through this line of congestion dots here. That's a resistance area, okay? And if you're looking at this, you had higher highs with lower highs in the stochastics. Now, the thing about this is you cannot read that until a bearish bar develops. So my anticipation until that divergence appears is that this will go up to 2632. Now, once it gets to 26.32, which is the ATR over here, then it may come down. That's when you have to reanalyze it. So in this case, this is a 61 pip move potential on the USD, on the British pound US dollar 6-hour chart, okay? I would prefer to wait for the retracement and then enter this. To me, right now, it's kind of in the middle of nowhere. And I don't like to take trades in the middle of nowhere. I like for it either to be at this moving average or this ATR. And then that would allow you to have more of a profit potential. In other words, this would be more than likely would be a touch bracket for me, whereas this could be a 2-hour binary or it could be a daily, either one. Because at 61 pips, that's 3 strikes on a daily. Everybody understand that one? I do think we're going to get more upward movement. Is it there yet? No. Okay. Could you go down in time and see that set up? You probably could. Okay. Now let's go look at the USD CAD. The USD CAD is really overextended on this weekly time frame, but these two right here are not showing any overextensions. Okay. And then when you're looking at the daily, you can see this is making new lows. The stochastics has not gone lower. You do need a bullish bar to confirm that. Without the bullish bar, you cannot read that divergence. Now, based on the ATR alone, this is moving down, this is moving down, and this is moving down. What I would like to see is a counter trend trade, which would be up to this ATR, which is 59 ticks. And then, remember I told you, once it gets to a resistance area, I would use this low as my profit potential. So you would have a potential for 60 pips up and then 60 pips back down, basically. Any questions on that one? And usually you'll get this double bottom pattern that appears. That's kind of what I would be looking for that trend to end. Right now, there's no indications that it will. Let's go look at the USD Swiss franc. And on the USD Swiss franc, the weekly chart is not showing any type of overextension on the oscillators. It's not overbought, it's not oversold. The market is therefore moving down, okay? Then when you look over at the daily, you are in a consolidation phase with a resistance here and a potential area that may support price here. Then when we look at the 6-hour chart, it is also going down, okay? And I think it will come back and it will test this area right here. And the issue with this is you're just too close to it, okay? Maybe if it came back to this ATR, okay, maybe then I would look at a potential entry to the downside. Right now, it's too close. Again, USD Swiss franc, 2-hour binaries do not open until 8 a.m. tomorrow morning. Right now, you would be stuck trading a daily, and the strike width on the daily is 20 pips, okay? Any questions on the USD Swiss franc? All right, let's go and look at the USD JPY. And on the USD JPY, if you're looking at the weekly chart, again, there is nothing indicating that this market is oversold at the moment, okay? In fact, it looks like it just formed a resistance area right at the fast period moving average. Okay, my prediction on that is more than likely it's going to go down. Does the daily agree with that? Well, you're not overbought, you're not oversold, so you're not getting a lot of information here. And this is in a consolidation phase. Okay, so this one, You know, you may get support down here, okay? But again, if you're looking at the 6 hour, this is pretty visual. I mean, it's 21 pips, okay? So within the next 21 pips, you're going to go into a support area, okay? That doesn't make me want to trade this, especially considering the Asia is not open tonight. What I would prefer to do is get up tomorrow morning, see if it tested this area. Did it form a pivot high to the upside? Okay. If it did, and maybe the stochastics is overextended, okay, I might do a counter trend trade back to the ATR and then back down. Okay. Any questions on that? And again, this is a great example of I'm going to be trading 2 hour binaries, probably the first of the week, that flow into a potential touch bracket. Because to me, and you know, I've said this quite a few times, to me, this retracement, the counter trend trade, that's usually a 2 hour binary, could be a couple of 2 hour binaries. And then the resumption of the trend is touch bracket. Why? Because this is usually the bigger move. Simple. Any questions? Okay. If you do not have any questions, then again, I would like to invite you, let me put it a different way, to visit my website at www.tradershelpdesk.com. If you prefer to send me a question via email, my email address is gm@tradershelpdesk.com, and my phone number is 336-263-0122. You may have to leave me a voicemail message, but that's okay because I will get back with you, okay? I hope everyone has a wonderful night and a wonderful week trading, and I look forward to having you in the room next Sunday for the Forex breakdown at 7 p.m.